Hi, what is it that truly determines your interest rate? Well, today I'm going to discuss at least 4 things that do factor in for sure. For starters, probably one of the most obvious ones, we've discussed it in the past, is your credit score. The higher your credit score, the better the terms are that I can offer you, the better interest rate it is that I can offer you. Let's just take, for example, that you have 2 clients. They are both purchasing a home at the same sales price. They're both putting 5% down. They're both doing conventional financing, and they're both locking in on the exact same day. However, the one difference is one of the buyers has a 660 credit score, one of the buyers has 760. The one with 760 is going to get a better interest rate. They're going to have a better rate, potentially lower points, things of that nature, because they have the 760, whereas the other client has the 660. So even though they're locking in on the exact same day, exact same terms all the way across the board, that credit score is the one difference that will make the 660 credit score guy pay a little bit more for his loan. Second thing, your down payment. Now, I've stressed in the past, you don't have to have 20% down. However, if you're able to come up with 20, 25, 30% down, oftentimes the interest rate is just a little bit better, and that's largely due to the fact that it's less risk to the lender. So if there's less risk, they're able to give you a slightly better rate oftentimes. So down payment definitely is another factor that comes into play and has an impact on what rate you might get. The third item that I want to discuss today is the loan type. Are you doing conventional financing? Are you doing VA? Are you doing FHA, USDA? Are you doing what we call a jumbo loan? All of those loan types have different criteria as to how they come up with your interest rate that they're offering. So it's very, very possible, again, if you're getting a rate quote on the same day and one client's doing conventional 5% down, one's doing an FHA, one's doing a VA, they're going to all slightly have different rates, and more than likely the VA and the FHA client are going to have slightly better rates. It's just the way it kind of works out right now. And then lastly, market conditions. And this one I can't stress enough, because what happens is we've had a lot of volatility, especially over the last 6 months or so. And so when you're seeing persistent inflation, you're seeing all the various geopolitical things play out, you're seeing higher oil prices, all of those things are impacting the type of rate it is that we're able to offer you. There are times during the day that we might have a couple different rate changes. So in other words, the rate might start at one level in the morning and be, as much as, an eighth of a point higher later in the day, because there was something that happened geopolitically, or there was an inflation report that came out. I've mentioned this many, many times this year. Rates are going to get better once we get all of that in check. So that is probably one of the biggest factors, is just overall market conditions that are playing into what kind of rate you're going to potentially get. Let me just share one last story here with you. I recently had a client that was doing a VA loan. We quoted him the rate. The realtor seemed to think that the rate was a little bit too high. So she got on a conference call with us and the buyer and said, hey, I think this rate's a little bit high. My client has a really high credit score. I think they have like an 800 credit score. Well, it was the buyer that piped in and said, oh, no, time out. I don't have an 800 credit score. I have like a 600 credit score. And it was good that he said that, because I can't disclose what kind of a credit score he has, but he offered up that information. At which point the realtor immediately understood, okay, that makes more sense. A little bit lower, with a lower credit score, you're going to have a slightly higher rate. So it's just really, really important to make sure you're paying attention to your credit scores, save up what you can for down payment, and then again, depending upon the loan type, that'll have an impact as well. Market conditions, what's happening with regards to the economy and in the world, geopolitically, et cetera. We can't control any of that. I certainly can't. You can't either. So, but you can focus on those first three items. So keep that in mind when you're thinking about buying a home and what kind of a rate you're going to potentially get. If you found this information helpful, please subscribe and like to our page here. And of course, if you have any questions at all regarding getting qualified or seeing just where you're at, what kind of a rate you might anticipate based on what you want to do, give us a call, text us. We're always here. You have a great day. We'll talk to you soon. Bye-bye.